Okay. Good afternoon, everyone. Is this screen visible to everyone?
Yes, sir. Your first page of the PPT is visible.
Okay, okay. Thanks. Good afternoon, everyone. As an insolvency professional, as you know, we frequently face complex issues when it comes to the treatment of government dues and operational character. Under the IBC, these two categories of claim, government dues on one hand and operational characters on other, have been the subject of extensive litigation and evolving juris, jurisprudence before the enactment of the IBC under legislation such as the Sikh Industrial Companies Act, SICA, and the Companies Act. There was a significant confusion and inconsistency regarding priority of claims. Government authorities such as sales tax department, income tax, excise, and custom frequently asserted that their statute dues had a first charge over the asset of the corporate debtor. This often conflicted directly with the rights of secured financial creditor who had mortgage of securities interest over the same assets. At the same time, operational creditor who include supplies of goods and services, employees, workmen, and government departments for statutory dues were often left with little clarity about their position in recovery proceedings. They were essential stakeholders but had limited say in decision making under the earlier legal framework. The IBC was designed to resolve these conflicts and bring clarity. The legislature made two deliberate choices. Government dues under IBC. As you know, Section 53 of IBC, the waterfall mechanism, places government dues below secured creditors, workman due, and even unsecured financial creditor. This reflects a concise policy decision that revival of a company is more important than maximizing government recoveries in insolvency. Earlier, what was happening? Government first intention was to recover their dues, statute dues, government dues. Okay. Now, paradigm shift after the IBC code. Now, first priority is to revival of the company, then maximizing, more than important than the maximizing of government's recoveries in insolvency. If companies are revived successfully, they will contribute to the economy by paying future taxes, generating employment, and creating value. As you know, there are several judgments are there. Several judgments have reinforced the principle. The Supreme Court in Ghanshyam Mishra and Sons Adulus ARC 2021 held that all past claims, including government dues, stand extinguished once a resolution plan is approved. The landmark judgment settled a long-standing dispute by ensuring that resolution applicants get a clean slate. However, conflict decisions like Rainbow Papers were where the Supreme Court held that the statutes under the Gujarat VAT Act could be treated as secure debt. There are contradiction also in the judgment given by the Honorable Supreme Court. So we will discuss in all these cases in PPT. Gujarat VAT Act could be treated as secure debt, reopened debate and created uncertainty through, though this has since been reconsidered in later cases. Now we will talk about the, if we will understand in the preview of the IBC code for operational character under IBC, unlike financial character, operational character don't form part of the COC, as you know, unless they meet a specific threshold. The, this restricts this role in decision making during insolvency. As per section 243C of the IBC, operational character were entitled to attend the COC meeting if their aggregate dues owed to them are at least 10% of the total debt. They may attend the meeting, but they don't have the voting right. Okay, the voting right is are with only financial characters. They have the power for voting right. If total debt for operational character is more than 20%, they can attend the meeting, but they don't have the voting right. However, the IBC ensures the operational character are not left out. As per under section 32B, a resolution plan must provide for payment to operational creditors of at least the amount they would receive in liquidation under section 53. As you know, section 53 pertains to the waterfall mechanism. The Supreme Court in Swiss Ribbon Private Limited Cases versus Union of India upheld this framework, observing that while operational creditors are treated differently from financial creditors, the distinction is based on intelligible criteria and serves the larger objection of effective resolution. Okay, means if we will take together, these developments show that IBC strikes a delicate balance. One side, it downgrades government dues in priority to encourage revival and protect secure creditors, and the other hand, safeguards operational creditor by ensuring they receive at least liquidation value, even if they don't have the same decision making right as a financial creditor. Today's session, we will explore this subject in depth. We will look at the legislative intent behind how government dues and operational creditors are treated under IBC, the practical issues we face as an insolvency profession in handling such claims, and most importantly, the key judicial pronouncements, judgments from the Honorable Supreme Court, the Honorable Delhi High Court, and other forms, they have shaped the law in the area. I have prepared a detailed PPT covering these aspects. I believe this will help us to develop a deeper understanding of how to deal with the government dues and operational creditors effectively in insolvency cases. So let's begin with the presentation. Please confirm this slide, sir. Okay. Okay. Now we'll start treatment of government dues and operational creditors under IBC. Okay. First, we will go through the what is the preamble of IBC. As actually we know, there are two things: government dues and operational creditor. Earlier, there was the Act SICA and Companies Act was there before IBC, and prior to the IBC, in in SICA, the prime objective and intention purpose of government was to recover the government dues first. They were means less interested for the survival of the business. They were more interested to recover their government dues. Okay, but now after means IBC code, the paradigm has been shifted. Now, as per IBC Act, the first intention to survive the business. If business will survive, then government will continue means get their government dues or statutory dues. Now, what is the preamble of IBC has alteration in the order of priority of payment of government dues as one of its objective. Prior to notification of IBC, there was a lot of confusion about the priorities of claim over the sale proceeds of the liquidation estate of the company under winding up and liquidation. Different stakeholders were claiming their priority over the claim of other stakeholders, especially the statutory creditor were claiming their first priority over the said proceeds, and a result, the secured financial creditor were suffering. Okay, means as per IBC Act, the first priority is to recover for the secured financial creditor and then operational creditor, then government dues. Earlier, what was happening? The government was and other creditors were means claiming first priority as compared to the financial creditors. Means financial creditors were suffering due to this, and therefore the resolution and rehabilitation were not taking place. Considering the said problem, the legislature, while enacting IBC, decided to alter the priority of payment of government dues and place them in the priority in First, below CRP and liquidation cost, dues of secured financial creditors and workman dues for last 24 months, employee dues for at least 12 months, and unsecured financial creditors. Means now after IBC enacted, the priority of payment for government dues has been means having the least priority. As per before IBC, government dues was first priority, but now after IBC, government dues have the less priority. Okay, now this is as per the section 53 waterfall mechanism. Payment when company goes into the liquidation, payment is done as per section 53 as per waterfall mechanism. The priority is given, first priority is given to the CRP cost, liquidation cost, dues of financial creditors and workman dues for last 24 months, employee dues for the last 12 months, and unsecured financial creditors. So this is the priority. Okay, means after implementing the IBC code, priority has been changed. Okay. Now, preamble of IBC, an act to consolidate and amend the laws relating to the reorganization and insolvency resolution of corporate persons, partnership firms, and individuals in a time-bound manner for maximization of value of assets of such persons to promote entrepreneurship, availability of credit, and balance the interests of all the stakeholders, including alteration in the order of priority of payment of government dues, and to establish an insolvency and bankruptcy of Board of India, and for matters connected therewith or incidental thereto. Okay, means as per IBC code, now there are two things. Number one, priority has been changed. That was the primary objective. Now, as per IBC code, first intention to survive the business, and if any company goes into the CRP or in the liquidation, all the process is completed will be completed in a time bound period, because as you know, we have to complete the CRP within 180 days. Extension is given for 30 days, more extension is given 30 days. Maximum we have to complete within means 180 days plus 60 days. Okay, so we have to complete that CRP. If we are unable to complete that CRP process and unable to survive the business as a RP, so then company will go into the liquidation. So then primary objective of this code is to find out the resolution process within a time bound manner. Okay, and the maximization value of the assets. If company is in CRP process, so then our intention is to survive the business along with maximization of value of the assets within a time bound period. If company goes into the liquidation, so then our intention will also be to recover the value of the assets. Okay, and also in a time bound period. So means IBC code is a time bound act. Earlier what was happening, the time was also taking very much time, and primary objective of government was to recover their government dues. They were not very much interested to survive the business. Okay, so that was the problem, because if company if government will recover and give first priority to recover their government dues, so then company is not means performing well, and government is recovering their dues first. So then how it's possible to revive the business? So that's why after IBC, priority was given for government dues at lower priority. So if business will means survive, so then government can recover their dues and also will get means in future also in continuously they will get means their government dues and statute dues and taxes from company. So that is also a good for government. Okay, from economic point of view, and also for company, if any company is in CRP, so then also this is also good for CRP company, because in this situation company will be more in a good situation to survive the business. if the priority of the government dues are at means lower side. So that was the preamble. Now we will discuss definition of operational debt and operational creditor under the code. See, operational creditor means a person to whom an operational debt is owed and include any person to whom such debt has been legally assigned or transferred. What are the operational debt? Means a claim in respect of the provision of goods and services, including employment. A debt is in respect of the payment of dues arising under any law for the time being in force and payable to the central government, any state government, or any local authority. Means, as we know, there are main three sections: 7, 9, and 10. Section as per section, financial characters submit their application for CRP, and operational characters submit their application under section 9. But when any operational character want to submit their application under section 9, that operational debtor will have to issue demand notice under section 8 unless until 10 days will complete. After completing the 10 days of the demand notice under section 8, then operational character can submit the application with the adjudicating authority. Now, when this IBC means act implemented, at that time operational character threshold limit was 1 lakh. Now, after some time, now threshold limit was changed 1 crore. Now, as of now, the threshold limit is 1 crore for financial character and also 1 crore for operational character. Now, operational character means if any vendor, any supplier is supplying any goods and any service to the company, okay, and also a employee also covered under the review of operational character, okay, and also the government dues will also be considered as a operational debt, okay. So means the government dues will no priority will given to the operational means government dues, okay, means they will considered as the operational debt, okay, and government and state government will have to submit their claim as per this act. If in case if government dues are not submitted, government will have to follow the IBC code. Okay, it doesn't mean ki, means as per IBC code there is no priority is given to the government if they will not submit their claim. And means for example, if because as notice is also given to the government authorities, if they will not submit their claim, if they will not submit complete their assessment on time, so then it doesn't mean, for example, if a resolution is approved by the COC and also approved by the adjudicating authority, if after that period, if government is means submitting claim, so that this claim will not be entertained. It doesn't mean that claim pertains to the government. They will have the priority and they will have the right to submit the claim anytime, because as you know, IBC code is a time bound process and time bound period, because resolution professional have to complete the resolution process within a time frame period. If resolution professional will not get the claims as per the IBC code, so they have the right to reject the claim. They, then he will not approve the claim. In case if means operational character is not satisfied, so they can approach to the adjudicating authority, but adjudicating authority will also follow as per the IBC code. Okay, so means operational character means a person to whom an operational debt is owed and include any person to whom such debt has been legally assigned or transferred. Operational debt means a claim in respect of the provision of goods or services, including employment. Okay, including employment means if any employee is working or any group of employees are working, if they not means they have means dues more than 1 crore, Okay, so then they can also means submit the application under the as the operational character under section 9. Okay. Now, definition of operational debt and operational character under this code. As per the definition of the terms, operational character are operational debt as provided in section 520 and 521 respectively. As reported above, a tax liability being a debt in respect of the payment of dues arising under any law. Tax liability means tax liability may be in the form of income tax, okay, TDS, GST, custom, excise, okay. And if we will talk about the government dues, there may be other government dues means PF, ESI, okay. So means as per prevailing law, any government dues which are applicable to this to particular that company or particular that industry. So these government dues and tax liabilities as applicable to that company, okay, is covered under the means operational debt in the terms of the operational guide. Okay, but these sections are section 520 and 520. Okay, 521, 520 means operational character. Section 520 says about the who will be covered under the operational character. Okay, and what will be the operational debt defined in the section 521 respectively as reproduced above. A tax liability being a debt in respect of the payment of dues arising under any law for the time being in force and payable to the central government, any state government or any local authority falls within the definition of the operational debt and the operational character. As such, the tax liabilities and also means government dues and tax liabilities have to be treated, means government dues and tax liabilities. See here, we can say government and tax liabilities have to be okay for the purpose of the proceeding under the IBC. So this is the definition of the operational character and operational debt. Okay, means in this session we are covering government dues, operational and operational character. Means we will also discuss in detail. There are various means judgments are there. Very important, critical and important judgment given by the Supreme Court of India. Okay, means in some of the cases there is a contradiction. So we will also discuss why there are contradiction in which judgment they give, which judgment given by in particular case by the Supreme Court authority. Means one of the case they are saying कि there is no priority given to the government dues. In another case, and in another judgment, Supreme Court says कि priority will given means to the government for this particular act because as per IBC code, in case if there is a contradiction with in another act, IBC will override this act. Okay, as per means IBC code, if, for example, if there is a provision in Income Tax Act, okay, and if company is in the process CRP, so then IBC code override the Income Tax Act in case if company is in means CRP process. So means as per IBC code always override other act. So that is the means first priority for IBC code. Now, for example, if we have to take decision as a resolution professional if there is no clarity means in one of the section because as you know right now means committee is working Also on because we right now we don't have specific section and provision related to group insolvency, cross border insolvency. Okay, means that as per IBC Act, when we don't have specific section and provision for any particular issue, so then authority NCLT have the special power under the Rule 11. So they can take means decision related to means IBC matters. Okay, so that's why in case if there is not clarity, so what will you do? We will see what are the judgment rate given by the honorable means authorities, adjudicating authorities. In the light of the judgment, we take the decision. But in if adjudicating authority given means contradictory means judgments, so then there is a problem. So we will discuss in detail in the means coming next slides. Treatment of tax liability as an operational debt under a resolution plan. So treatment of tax liability means government dues. Tax liability covered also a government dues. Okay. So when we are talking about tax liability means we are saying government dues including tax liability. So treatment of tax liability as an operational debt under a resolution plan. Section 32B of IBC deals with the treatment of an operational debt under a resolution plan. The relevant portion of the said section is reproduced below. The resolution professional shall examine each resolution plan received by him to confirm that each resolution plan B provides for the payment of debts of operational creditors in such a manner may be specified by the board, which shall not be less than the amount to be paid to such creditors in the event of liquidation of the corporate debtors under section 53. Means when any company is in the process of CRP, resolution process. Okay. And as you know, IRP and resolution professional means accept the claims. Okay. But they will also ensure when they are accepting the claims, they will verify the claims. Okay. And they will approve the claims. The amount to be paid to such creditor, okay, it will not be less as in the event of the liquidation of the corporate under section 53. Okay, means they will get their claim amount which will not be less than and which must be equal in case if company goes into the liquidation. So what amount they will get? So that amount they have the right to get whether they are in insolvency professional resolution process, okay, or in liquidation. Okay. The amount to be paid to such creditors in the event of liquidation of the corporate debtor. Section 53, we will discuss, and above also we have discussed. Section 53 says waterfall mechanism. As per waterfall mechanism, we have to make the payment to the operational creditor, to the financial creditor, to the government due, to the tax authorities, okay, to CRP cost, to liquidation cost, okay, to unsecured financial creditor, okay. So means the priority has given, okay, and already decide ki who will get what will be the priority as per section 53 as per waterfall mechanism already defined. Now there is no dispute. Earlier there was a dispute ki creditors were means operational creditor or other creditors were means asking their dues first before financial creditor. Okay, so means before this earlier this act, they were not getting the financial creditor were not getting the priority. Okay, now the amount that would have been paid to such creditors if the amount to be distributed under the resolution plan had been distributed in accordance with the order of priority in subsection 1 or section 53, whichever is higher. Okay, see here. Treatment of tax of liability as an operational debt under a resolution plan. The Resolution 30 38(1)(a) of IBBI provides that the amount payable under a resolution plan shall be paid in priority over financial creditor. Okay. The relevant portion of the said resolution is reproduced here under mandatory contents of the resolution plan. The amount payable under resolution plan to the operational creditor shall be paid in priority over financial creditor. In view of the above, the tax liability has to be treated as an operational debt under IBC and should be dealt with and as per the treatment provided under section 32B, read with regulation 38(1)(a) CRB regulation. Means treatment of tax liability as an operational debt under resolution plan means when company is in resolution process means CRP. Second step is liquidation. If there is a government dues and tax liability as operational debt under resolution plan, so then regulation 38(1)(a) will applicable, and 38(1) says provides that the amount payable under resolution plan shall be paid, because in this situation what is happening, our priority to survive the business. So in this case financial creditor will not means will run the business. They will, financial creditor will be the part of the COC members. Okay, so they will take all the commercial wisdom decisions. So then they will also means pass the resolution plan. Okay, if COC will approve the resolution plan, if the adjudicating authority will also means approve the resolution plan, so then that resolution plan will be applicable to all the stakeholders. Okay, so means when we are saying ki applicable to all the stakeholders means in the stakeholders government dues and government authorities also are covered. For that will be bind to all the financial creditors, will bind to operational creditors, will bind to government authorities. Okay, and to other means means other than stakeholder who are means directly or indirectly related to the resolution or liquidation process. Mandatory contents of the resolution plan. What will the mandatory contents? The amount payable under resolution plan to the operational creditor shall be paid in priority over financial creditor. That will be the mandatory content in the resolution plan. In view of the above, the tax liability has to be treated as an operational debt under IBC and should be dealt with as per the treatment provided under section 32B, read with regulation 38(1)(a) of CRP regulation. Now, binding effect of the treatment given to a tax liability under resolution plan approved by Honorable NCLT means binding effect of the treatment given to a government dues, operational creditor, tax liability. We will cover everything here. Binding effect of the treatment given to a government dues, operational creditor, and tax liability under a resolution plan. Because I have mentioned here tax liability because mostly government dues are covered, mostly the tax liability. They are also will include also with government dues. In government dues, we can also cover the electricity bill, water bill, MCD bill. Okay, means we can cover all other things also. Means in government dues. So if these tax liabilities also the part and parcel of the government dues, means government and statutory dues. Okay, so means tax liability means we are including here government dues and statutory dues. Okay, now binding effect of the treatment given to a tax liability under resolution plan approved by Honorable NCLT. Section 31 of IBC provides binding effect to a resolution plan approved by Honorable NCLT, and therefore a resolution plan is approved by the Honorable NCLT. The same is binding on all its stakeholders, as we discussed, including the central government, state government, or any local authority to whom a debt in respect of the payment of dues arising under any law for the time being in force, such as authorities to whom statute dues are owned. Okay, now, as we discuss, if claim is not submitted by the government authority. Okay, now we are in this session, we are covering government dues and operational guide. In government dues, when we are talking about government dues means payment to electricity department, payment to PF department, payment to ESI department, and also this including the statute dues. Statute dues means PF is also a statute dues, but in statute dues we can also cover, we will cover the tax authorities. In tax authorities, we can cover GST department, custom department, excise department. Okay. So means if operational creditors are to submit their claim as per the model timeline given in the CRP, also model timeline given in the liquidation. If they if they means creditor, whether they are financial creditor, whether they are operational creditor, if they don't submit their claim in time, so IRP, resolution professional or liquidator will not means 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 exact the claim. Okay, if they are not getting the claim in as per time frame, so they have the right to reject the claim. The intention is to complete the resolution process and liquidation process in a time bound period. Why? If creditors are not submitting their claim in time, okay, so if any creditor will come and say ki I have missed out that date, you consider this one, so what will happen? Resolution professional will not be able to complete the complete the resolution process in time bound period, because as a resolution professional we have only 180 days. If extension will be given to us for more 30 days, 30 days plus 30 days, so then what happens? How much days we are getting? Total we are getting 240 days. Okay, in and liquidation we are to complete in 1 year, in 1 year. So then IBC code, the beauty of this IBC code is to complete the process within a time bound manner. So that, and that is also very helpful. For example, if as a resolution professional, if I will complete that process in time frame, either if business can be survived, so if survival is there, if business is survived within a short period, a time frame given, so that is a plus point for company, for financial creditor, for government. Also, if not completed in time period, so then company will go into the liquidation, but that is also a time bound period. Means in time frame, either company will survive or either company will go into the liquidation, but creditor will get their claim as per the proportion. For example, if company go in the liquidation, so at least they will get the amount meaning in proportion of the recovery of the assets. We means sale proceeds of the company's assets, whatever we, amount will get by the liquidator, the same all the proceeds will be distributed proportionally to the creditors. But over everything will be happen here within time frame period. But before this act, what was happening? That means it was taking very much time. If it is taking 4 years, 5 years, 6 years, 7 years, 8 years, 10 years, so if in case if more time is taking, so then what will happen? The value of the assets will reduce. Okay, and claim, if I'm to get claim of rupees 10 lakh, so then if today the value of the asset is 10 lakh, so then at least I can expect I will get the my claim amount. If it will take 3 years, 4 years, the assets value will be means less as compared to the 10 lakh. So if asset value is say 5 lakh after 3 years, okay, so that will happen. I will get 50% of the my claim, because maybe that plant and machinery, that asset is not useful after 3 year or 4 year, 5 year. Okay, and if company will close, so then what will happen? If it after 3 years, if promoters thinking to start that company again, demand factor will be there, miss, and maybe assembly line, production line, it may take much time and more investment. Okay, so then this thing will be very risky. So that's why, if IBC, as per IBC code, if any application submitted by the adjudicating authority, if resolution plan is approved by the COC and also approved by the NCLT, after approving the resolution plan by the honorable court, no claim will be entertained by the resolution professional, by the liquidator, by the adjudicating authority. Because when we have passed the resolution plan, what it means? Another party, another company submit their resolution plan. Okay, so then when the resolution plan approved, already everything means discussed, negotiated. Okay, after resolution plan, okay, for example, if I purchase the business in 10 crore, okay, if I'm bound to pay the 10 crore rupees to the financial creditor, to COC members. Okay, if a new claim is coming, so then what will happen? I will have, if after getting resolution plan, if someone says me ki that amount claim was pending for 2 crore, so you will also need to pay 2 crore. So that is not fair. So that is the main point. After accepting resolution plan by the NCLT court, then clean slate is given. Clean slate in given means that resolution applicant will not be means responsible for any claim or any demand after the resolution plan approved by the NCLT court, and if this deal has been completed. Means after the resolution plan approved by the adjudicating authority, then resolution applicant will not be responsible for any new dues, any demand. Okay, whether it may be submitted by the government authority, so means that will be dismissed, that will be rejected. Then resolution applicant will not be responsible for new demand or new claim. So that is the main and critical point from the point of view. Claim must be submitted within a time frame period, whether by operational character, whether by government authorities, whether government authorities means including statutories also. Section 31 of IBC is reproduced in the following slides. Section 31 says approval of resolution plan. Okay. See, if the adjudicating authority is satisfied that the resolution plan as approved by the committee of creditors, okay, as you know, in the committee of creditors, there will be only financial creditors. Okay, under subsection 4 of section 30 meets the requirement as referred to in subsection 2 of the section 30. It shall by order approve the resolution plan, which shall be binding on the corporate debtor. Okay, means corporate debtor means who were the existing means previous management. So that resolution plan will be binding upon on the corporate debtor, its employees, members means whether COC members, other members, creditors, I including, okay, means one means including the central government, state government, local authority to whom a debt in respect of the payment of dues arising under any law for the time being in force, such as authorities to whom statutory dues are owed. guarantors, and other stakeholders involved in the resolution plan. Okay. See, we have already discussed कि when any resolution plan approved by the adjudicating authority, that will be binding on all the stakeholders. In all the stakeholder means whether forward debtor, whether employee of that entity, whether member means financial creditors, COC members, and other members who have the shares, creditors. This also including central government, state government, and the local authorities to whom debt in respect of the payment of dues arising under the law of time being in force, such as authorities to whom statute dues, government dues, and statute dues are owed, grantors, and other stakeholders involved in the resolution plan. Provided that the adjudicating authority shall, before passing an order for approval of resolution plan under this subsection, satisfied that the resolution plan has provision for its effective implementation. See, there question comes ki whether if resolution plan is approved by the COC, so then adjudicating authority will approve the same plan which is approved by the COC. See, it's not a mandatory. Adjudicating authority will see if resolution plan is compliant as per means IBC code. Okay, if there is no injustice, there is no violation of any rule and regulations, so they will accept because they will not go into the commercial wisdom decision taken by the COC. Okay, adjudicating authority relies on the commercial wisdom decision taken by the COC. Normally, adjudicating authority will not interfere the COC commercial wisdom decision taken by the COC. Okay, unless and until if any stakeholder comes and if adjudicating authority also satisfied that there is a violation of any other section as per the IBC code, so then they will take appropriate action or decision. Maybe they can reject the resolution plan. They can ask COC to modify the resolution plan. Okay, means adjudicating authority will approve the resolution plan if that resolution plan is compliant as per the compliance of the IBC code. Where the adjudicating authority is satisfied that the resolution plan doesn't conform to the requirement referred to in subsection 1, it may, by an order, reject the resolution plan. Okay, means they have also the authority and power. If plan doesn't confirm the requirement referred in section 1, means not as per the rule and regulations of the IBC code, then they have the authority and power to reject the resolution plan. Okay, if resolution plan is rejected and not means and also a time period is means and so then company will have to go into the liquidation. Okay, means within 180 days uh, uh, by 165 days COC members have to submit their resolution plan for approval with authority. If they will not approve, that plan is not approved, okay, and 180 days already completed, so then that entity will go into the second phase. Second phase means the company will go into the liquidation process. Okay, when company will go into the liquidation process, as you know, liquidator will be appointed. Okay, so then liquidator will also give the public do the public announcement. They will ask for the claims. Okay, they will have that resolution, the professional who or means will be called liquidator in liquidation process, and liquidator will hire registered valuer for each separate class. Okay, because now question comes when during CRP already resolution professional hired means registered valuer. So then why do we need to again means appoint a resolution professional in liquidation process? See, as we discussed, the motive, intention, and objective in both three processes are different. In CRP process, resolution professional intention or purpose or objective to survive the business. Okay. If company will survive, so then if a resolution plan is approved, so then company will not go into the liquidation process. Okay. In case if resolution plan rejected, if nobody means submit resolution plan and survival of the business is not possible, practically possible, so then if company will go into the liquidation, so then liquidator will appoint. So liquidator intention is to sell the asset. In CRB, maximize the value of the asset so that on that basis resolution plan can be accepted. But in case of liquidation, purpose will be sale of the assets and recovery of the assets, so that after sale proceeds, claim can be settled. So that is the main means objective and purpose are different in resolution CRP and liquidation. So that's why we have to hire, because registered valuer will here the valuation means will be on the base of means for the purpose of liquidation. In case of liquidation, so that's why we have to again hire the registered valuer. After the order of approval under subsection 1, the moratorium order passed by the adjudicating authority. Okay, when moratorium under section 14 will start, so then what will happen? No means case can be, no further legal action can be taken by any other person, authority, company against that company. The moratorium order passed by the adjudicating authority under section 14 shall cease to have effect, and the resolution professional shall forward all reports relating to the conduct of the CRP and the resolution plan to the board to be recorded on databases. Okay, means when moratorium will start, when adjudicating authority will pass the order under section 14 shall cease to have effect, and the resolution professional shall forward all reports relating to the conduct of the CRP and the resolution plan to the board to be recorded on its database. The resolution applicant shall, pursuant to the resolution plan approved under subsection 1, obtain the necessary approval required under any law for the time being in force with a period of 1 year. The date of approval of the resolution plan by the executing authority under subsection 1 or within such a period as provided for in such law, whichever is late. Provided that where the resolution plan contains a provision for combination as referred to in section 5 of the Competition Act 2002, the resolution applicant shall obtain the approval of the Competition Commission of India under the act prior to the approval of such resolution plan by the Committee of Creditors. Okay, means resolution applicant shall pursuant to the resolution plan approved obtain the necessary approval if required by under any law for the time being force within a period of 1 year from the date of approval of the resolution plan by the adjudicating authority under subsection. Okay, provided that where the resolution plan contains a provision for combination as required to in section 5 of the Competition Act, the resolution applicant shall obtain the approval of the Competition Commission India under the act prior to the approval of such resolution plan by the Committee of Creditors. Now, binding effect of the treatment given to a tax liability, government dues under a resolution plan approved by the Honorable NCLT. It may be noted that the binding effect of Section 31 on the central government, state government, or local authorities only for a debt due to the said government or local authorities on account of statutory dues. The statutory dues are those dues which arise as a result of provision and any law for the time being in force, that the same include the tax liability which arise as a result of the provision of different taxation laws such as Income Tax Act, GST Act, or any other tax authority. For government dues means EPFO, ESI, electricity bill, water bill, okay, means utility bill, which are related to the government authorities. The provision of an approved resolution plan are not binding on any government or local authorities unless the said provisions deal with any statutory liability of the corporate act. Okay, means that these provisions of an approved resolution plan are not binding on any government or local authority unless the said provisions deal with any statutory liability of the corporate actor. Means if statutory liability is there, okay, but related to the corporate actor, then these sections and these rules and these will be applicable, these provisions will be applicable to the government. The said provisions, if relate to grant of any relief or concession other than reducing the past liability of the corporate debtor in respect of taxation, the same shall not be binding upon the said government, local authorities, unless the same is pursuant to the policy, consent of the said government or local authority or any provision of the concerned. For example, that is also very fair and that is also in the interest of the entity. Means if government submitting their claim, if government is reducing, for example, if government was in the process of tax assessment, okay, and they submitted their claim, okay, as on the basis of tax assessment, later on, okay, after assessment, if any claim is reduced by the government authorities, so then it will not give the negative impact on the resolution plan because that is the favor of the resolution plan. Means the said provision if relate to grant of any relief or concession other than reduce the past liability of the corporate debtor in respect of taxation or government dues, the same shall not be binding upon the said government, local authorities unless the same is pursuant to the policy, consent of the said government or local authority or provision of the concerned. So that is the favor in favor of the entity. Okay, so then this can be that will be the relief or concession other than the reducing the past liability. That will not give the negative impact. Okay. Now, modification and revision of demand pursuant to a plan approved under. Okay. Modification and revision of demand pursuant to a plan approved under IBC, insertion of new section 156A in the Income Tax Act. Okay. See, as we discussed, whenever IBC code dealing with another act for that particular corporate entity, so then IBC code will override the act. But for this thing, a new section 156 was introduced by the Income Tax Act pertaining to the means IBC code. Okay, means if any company is in the process of CRP and liquidation, so then for that purpose, Income Tax Act included or added or amended or modified or revision and inserted new section 156A in the Income Tax Act. What Income Tax Act section 156 says? It has been noted that in the case of business organization, instances have been found where the court or tribunal or an adjudicating authority as defined in clause 1 of the section 5 of the Insolvency and Bankruptcy Code 2016 as the case may be, as a part of the restructuring process, recast the entire liability to ensure future viability of such sick entities and in process modified the demand created by various proceedings in the past by the income tax departments as well as among other things. Okay, see, again we will discuss here. It has been noted that in the case of business organization, okay, instances have been found where the court or tribunal, means they are talking about the NCLT, NCLAT, or adjudicating authority as defined in clause 1 of section 5 of the IBBA code, as the case may be, as a part of the restructuring process. Okay, after restructuring, recast the entire liability to ensure future viability of such sick entities and in the process modify the demand created by the various proceedings in the past by the income tax department as well as among other things. No procedure or mechanism provided in the act to reduce such demand from the outstanding demand register. Hence, in order to remove this anomaly, it has inserted a new section 156. For example, if the means claim was submitted for 1 crore rupees, okay, but company don't have the money, so company will proportionally pay to the all financial creditor, operational creditor as per the waterfall mechanism section 53. Okay, they will give and pay for government dues and statute dues proportionately. So that what will happen. For example, if income tax department submitted their claim for 1 crore rupees, okay, but that claim is verified and approved 80 lakh as in the proportion of the value of the asset. Okay, if company is in the liquidation, so then what will happen? So they will also modify that demand because they will not means income tax will also not take outstanding demand. They will also amend the demand as per IBC code. So for that purpose, section 156A inserted in the income tax act. So that is very important, critical to understand when we are dealing and when we are in the process of CRP and liquidation. When any demand, there are two or three things. Number one, if claiming is not submitted by the income tax authority, any government authority in time, so then that demand and that statute dues will not be entertained. Number one, although adjudicating authority have the right, if resolution plan is not approved by the COC and adjudicating authority, if any government authority or any stakeholder approach to the adjudicating authority and adjudicating authority think that there is a reason for not submitting the claim, or and if they are giving the time, so then that demand and that dues will be entertained. Otherwise, as per IBC code, resolution professional liquidator will reject that plan, reject that dues and statutory, means dues for government dues and statutory dues. Okay, and if already submitted any claim, if that claim is not approved, means 100%, if there is a reduction as per this IBC code, so then that demand will be, means demand will be revised by the that department. So that section is very important. Now, modification and revision of demand pursuant to a plan approved under IBC, insertion of new section 156 in the Income Tax Act. Section 156A(1) of Income Tax Act 1961, where any tax, interest, penalty, fine, or any other form in any other sum in respect of which a notice of demand has been issued under section 156 is reduced as a result of an order of the adjudicating authority as defined in clause 1 or section 5 of the IBC code 2016. The assessing officer shall modify the demand payable in conformity with such order and shall thereafter serve on the assessee a notice of demand specifying the sum payable, if any, and such notice of demand shall be deemed to be a notice under section 156, and the provision of this act shall accordingly apply in relation to such notice, where the order referred to in subsection 1 is modified by the NCLT or Supreme Court, as the case may be. Modified notice or demand as referred to in subsection 1 issued by the assessing officer shall be revised accordingly. Okay, this thing we have already discussed. If any claim, any statute dues is reduced as a result in order of the given by the adjudicating authority, whether it's related to the tax, interest, penalty, fine, so then that demand will be modified by the assessing officer. Means that assessing officer shall be revised that demand accordingly as per the notice or as per the approval as demand as per the approved by the adjudicating authority. Okay, so then modification revision of demand pursuant to a plan approved under section IBC insertion of new section means here section 156A says, in shortcut, if you will understand, Income Tax Act will follow the IBC code. Simply in one liner we can say Income Tax Act section 156 says if any demand, any claim related to the corporate debtor is there pertaining to that particular company or entity, then Income Tax Act section 156 related to the demand, assessment, tax, interest, penalty. So then that section, that act will follow the IBC code as per approval, as per demand reduced by the adjudicating authority. Assessing officer will modify their demand, their claim, okay, as per the result of an order issued by the adjudicating authority under the IBC Act, IBC code 2016. So that is the, in one liner, I'm again telling you, in one liner we can say understand section 156A Income Tax Act will follow the IBC code 2016. Now, as we discussed earlier, priority was given by the government authorities dues and claims. Now paradigm shift to after the IBC code 2016. Now government dues, operational creditors, claims, financial creditors, all the payments are done as per the priority defined under the section 53 of liquidation under the Liquidation Act and as per the waterfall mechanism. Now we have already given a standard format and that is the priority, and according to that priority, all the claims, all the payments are done as per waterfall mechanism section 53. Okay. Earlier than IBC code, so there was no such priority was given. Okay. So due to that, means government was recovering their dues and statutory claims. Okay, on priority basis. So they were not very much worried about whether company or business will survive or not. Okay. So then due to this, what was happening? Company was suffering, economy was suffering, time was taking very much time. Okay. So now, after IBC code, that is a time bound period. Now, if company is in CIP process, so then creditor will get their maximum value of their assets. In case liquidation, so then creditor will get their means maximum recovery from recovery from the sale proceeds of the assets. Okay, so but plus point is this: after implementing the IBC code, now we have the standard priority list. Ki how we are to do the priority to which stakeholder. Okay, so that is very good from the means fairness point of view. Okay, and now after this, there is no confusion also there, and everyone knows ki what will be the priority of their claim. So now there is no confusion. The authority can also take decision accordingly. Adjudicating authority also can take decision accordingly. Okay, business also understand the process and priority. So that is the plus point. For every stakeholders knows what is the priority, what is the process. Okay, so now clarity is there, and with clarity we have a time frame is also there because IBC is a time bound process. Now we will discuss the waterfall mechanism under IBC. Section 53 of IBC provides as to how the proceeds from the sale of liquidation assets shall be distributed in the liquidation process of a corporate entity. That is, Section 53 prescribes the order of priority in distribution of sale proceeds of assets of a corporate entity in its liquidation process. Tax liability in respect of the 2 years prior preceding the liquidation commencement date have been given a separate priority than the other operational debt of the corporate debtors. Section 53 of IB is reproduced in the following slides. See, distribution of assets, notwithstanding anything to the contrary contained in any law enacted by the Parliament or state legislature for the time being in force, the proceeds from the sale of liquidation assets shall be distributed in the following order of priority and within such period and in such manner as may be specified, namely. First, we will pay the insolvency resolution process cost and liquidation cost paid in full. First, the payment for CIP process and liquidation process will be given paid in full. Okay, point 1. Point 2. The following debts which shall rank equally between and among the following workmen dues for the period of 24 months. Okay, preceding the liquidation commencement date. Okay, before means when liquidation commencement date started, for last 24 months workmen dues will be given the shall be given the priority. Debt owed to secured creditor in the event such secured creditors have relinquished security in the manner set out in section 52. Okay, means these two will get the equal priority. Okay, means if we have a 20,000 rupees, okay, so we have to pay 20,000 rupees. So then what will happen here? We will give 10,000 here. Okay, 5,000 here, 5,000 here. Whether they have submit their claim, means first we'll give this. See here, the following debts will shall rank equally between and among. Here, okay. Wages and unpaid dues owed to employee other than workmen for the period of 12 months preceding the liquidation of workmen dues we will give 24 months. Secure creditors we will give as per section 52 under the B point. Number 3 point, wages and unpaid due owed to employees. Okay. Here we are making payment to workmen. Here we are making payment to employees other than workmen for the period of 12 months preceding the liquidation commencement date. Okay. Now, financial debts owed to unsecured creditor. See here. Here we have given debts to owed to a secured creditor in the event of secured creditors. Okay. Here we will give the wages and unpaid dues to owed to employees other than workmen. Payment to workmen we are doing here. Now financial debt owed to unsecured creditor will be on D point. Now E point. Okay, see here resolution CRP post, liquidation post given first priority shall rank equally for workmen and for secure creditors under B. Third, we will give wages and we means and unpaid on to employees. Okay, see here we are making payment to employees. Here we are making payment to workmen dues. For workmen dues, we are making payment for 12 months. Okay, here salary, when we are talking about salary, so then that will be for 12 months. Okay, now then D point we will give priority for payment to unsecured financial guarantor, financial debt owed to unsecured guarantor. That will be D. Okay, now that is see here 1, 2, 3, 4. Now this is the fifth point. When we are making payment to the government, that is coming in the fifth. Any amount due to the central government and the state government, the flowing dues shall rank equally between and among the flowing. Any amount due to the central government, state government, including the amount to be received on account of Consolidated Fund of India and the Consolidated Fund of State, if any in respect of the whole or any part of the period of 2 years preceding the liquidation commencement. Here also we need to be here. For example, if we are to making the payments for EPF, PF, so then company will pay for last 2 years. If payment is pending for more than 2 years, so then company will pay for 2 years as per this priority. Okay. Now, debt owed to a secured creditor for any amount unpaid flowing the enforcement of security interest. Debt owed to a secured creditor for any amount unpaid flowing the enforcement of security interest, if any pending. Okay. But here the flowing dues shall rank equally between these 1 or 2. Okay. Now, any remaining debts and dues, when we will give any payment for all the claims, then preference shareholder will get the priority as compared to the equity shareholder. If anything will balance will be distributed to the equity shareholder or partner as the case may be. So this is the waterfall mechanism as per section 53. So we always follow section 53 waterfall mechanism. Okay, so as per this priority list. So that is very important, critical when we are distributing the claims amount as per the sale proceeds of the company if company is in liquidation. So that is the priority list. Here, if in fifth point we will make the payment for government dues and all the statutory dues in fifth point. The see here, here priority is coming. See here, insolvency resolution process payment is and liquidation. That is the first priority. Second priority is workmen and secure creditor. Third is 12 months salary. So fourth is financial debt owed to unsecured creditor. Now payment priority to government and for statutory dues is coming on the fifth point. Okay, and also for only entity will be responsible for making 2 years means payment, whether that is electricity bill, EPFO bill, ESI bill. Okay, so this thing we need to means take care and remember. Now, here equal ranking if distributing the order of priority under that section shall be disregarded by the liquidator. The fees payable to the liquidator shall be deducted proportionately from the proceeds payable to each class of renters under subsection 1, and the proceeds to the rent recipient shall be distributed after such deduction. Explanation: for the purpose of this section, It is hereby clarified that each stage of the distribution of proceeds in respect of a class of a recipient that rank equally, each of the debts will either be paid in full or will be paid in equal proportion within the same class of recipients. If the proceeds are insufficient to meet the debts, means see here, for example, if we are to making the payment of say 60,000. Okay, the resolution cost is 20,000. Okay, but we recovered only 40,000. So then what will happen here? We have to make the payment 60,000. Okay, but we recovered 40,000. Okay, so then 20,000 will be given here. Remaining 20,000 will be distributing at 10,000, 10,000. Okay, got it? Now it is hereby clarified that each stage of the distribution of proceeds in respect of a class of recipient that shall rank equally, each of the debt will either be paid in full or will be paid in equal proportion within the same class of recipients if the proceeds are insufficient to meet the debts in full. The term workman's due shall have the same meaning as assigned to it in the section 326 of the Companies Act. Because in workman dues, we are supposed to pay for 24 months. Okay. Before means commencement of liquidation. Okay. For salary, we are giving, we have to give for 12 months. Okay. And with workman dues, we have to make the payment for secured creditors. Okay. And fourth point, we have to give the unsecured financial creditor. In fifth point, we have to make the payment to the central government dues or statutory dues payment. See here, we can also in shortcut we can understand what is the waterfall mechanism, because that is very important and critical, because when we are talking about the government dues and operational guidance, but we need to understand ki what is the priority also, because we know ki we are to means accept the operational characters and government claims, okay, as per the IBC code within as per time frame. But problem comes ki what will be the priority, because main IBC code implemented for change and change the priority. So that priority we must need to remember and take care as per the waterfall mechanism provided under section 53 as reproduced above the amount payable to the central government. Because when we will discuss the case laws and judgment, no, that are very interesting, because in one of the judgment, Supreme Court says ki we are to make the payment, we are to give the priority, and as per the IBC code, our IBC code will override the other act as per the IBC code, because over IBC code have the means override authority or power. But in another case, Supreme Court judgment given as per the waterfall mechanism provided under section 53 are reproduced above the amount payable to central government and the state government, which include taxation dues in respect of the period of 2 years preceding the liquidation process. Okay, ranks equally with the debt owed to secured creditors. Okay, equally with the debts owed to secured creditors for any amount unpaid following the enforcement of security interest. Okay, so see here, when we are talking about the government dues, okay, statutory dues, that will be entertained for last 2 years. When we are talking about the operational creditors, so that will be distributed as per the proportionate value. Okay. For example, if we have operational character submit their claim for 10 crore and we have only 1 crore, so then they will get 10% of the claim. But in case when we are talking about the government statutory dues, so they, if we have a sufficient amount, okay, so we will have to pay First, as per 2 years preceding the liquidation commencement date, as per the IBC. The above rank dues rank fifth in the waterfall after the flowing debts. First, we will give CRP cost and liquidation cost as we discussed. The flowing debts, which rank equally, workman dues 24 months preceding LCD, dues to secured creditors who have relinquished their security interest. Okay. Okay. Means A is there, in B is there, workman or this thing. Okay. Means B point. But we will give second priority to the workman dues for 24 months preceding LCD due to secured creditors who relinquish their security. C, employee dues for 12 months. Okay. This thing we have discussed. This is workman and this is employee. Workman payment will be on 20 months and employees dues for 12 months preceding LCD. Unsecured financial debts. Okay. Unsecured financial debts. And after this, what will happen? After this, penalty will be given for government dues and statute dues. But that period will be for 24 months proceeding to LCD. The taxation dues relating to the period to prior to 24 months preceding LCD, however, fall under clause F of section 53(1) under any remaining debts and dues. Okay. Now the above treatment of taxation dues, however, applies to only those taxation dues which are not secured. The treatment of the secured taxation dues is to be made following the judgment of the Honorable Supreme Court in the matter of Rainbow Paper Simply, which has been dealt with in the subsequent part of this presentation. Okay, we'll discuss the Rainbow Paper Simply judgment. Okay, but right now we are talking about the normal government dues and statute dues. Okay, that will have the priority on fifth number. Okay, and also prior to the period to 24 months preceding LCD. Okay. Now, tax liability. We can take, if you want, we can take 10 minutes break if you want to take. Do you want to take break or should we continue? I'm not getting any reply. Should we continue or should take break for 10 minutes?
Normally 10 minutes break will be given, sir.
Okay, it's okay. We will continue after 10 minutes. Na? You Okay, let's start. Government dues, yeah, tax liabilities, whether secured or unsecured. See, now we will discuss the statutory liabilities. Mainly, we are to deal with the statutory dues. Statutory means tax liabilities under different laws. Custom Act 1962, Income Tax Act 1961, CGST Act 2017. As per section Custom Act, section 142A doesn't confer or create first charge on the due payable except under IBC. So this is the section 142A say doesn't confer or create first charge on the due payable except under IBC. Okay. Means as per Act also, IBC code will override the other act. This act doesn't provide any provision for getting a first charge, but they have inserted section 156, which we have discussed. CGST Act 2017, section 82 of the act provides for tax to be first charged on property except under IBC. See, now tax liability under other laws. This is covering under the government dues or statutory dues. Custom Act 1962, Section 142A, liability under Act to be first charge, notwithstanding anything to the contrary contained in any central act or state act, any amount of duty, penalty, interest, or any other sum payable by an assessee or any other person under this act shall save as otherwise provided in section 529 529A of the Companies Act. The recovery of bad debts due to bank and financial institution and the Surface Act and the IBBI Code 2016. Tax liability under other laws, CGST sections 82 says tax to be first charged on property, notwithstanding anything to the contrary contained in any law for the time being in force, save as otherwise provided in the IBC code, any amount payable by a taxable person or any other person on account of tax, interest or penalty which he is able to pay to the government shall be a first charge on the property of such taxable person on such person. Okay. Now, role of tax authorities in the insolvency resolution process. Okay. So we will understand. Role of tax authorities in the insolvency resolution process. Income tax dues are considered as the operational debt under the IBC code. Tax authorities should file their claim with the IRP or IRP within the specific time period along with all the supporting documents. They should respect moratorium provision. They should check that their dues are considered in the resolution plan as per their entitlement. They should abide by the provisions of approved resolution plan. Okay. So this is the role of tax authorities or government authorities. Ki all the claims will be considered as a operational debt under the IBC code, number one. Number two, all the government authorities and statutory authorities will submit their claim with IRP or IRP within a specific time period. They should respect the moratorium. They should check whether dues are considered in the resolution plan as per the entitlement. They should abide the provision of approved resolution. Now, whether the assessment order and demand notice can be issued to the new management who takes over the existing business under IBC. So that is very critical and important question comes in mind. Ki when any assessment order and demand notice can be issued to the new management, because when any resolution applicant submit their plan, so then that resolution applicant will take over that entity will take over, and means new management will take over that entity. Means if there was XYZ company, okay, XYZ company goes into the CIP process or liquidation process, okay, goes into the CIP process. If TM company submit the resolution plan and the new management take over the business as per the resolution plan, now can tax authority or government authority can raise any demand or for regarding, for example, if there was a assessment or was going on by the income tax authority, so then they can raise the demand. Question comes, okay, as per IBC code, they cannot raise any demand, okay, with the help of the judgment. We will understand this thing. The Delhi High Court in National Swing Third Company Limited by D Deputy Commissioner of Tax 2024 on relying on the Ghansham Mishra and Sons Private Limited Supra was held that AO cannot raise tax demand after company was received and rehabilitated by new management under IBC. Okay, when resolution plan is submitted, approved by COC, and also approved by the educating authority, moratorium start. After approval of the resolution plan, no government claim or taxation, any statute dues will be entertained or means clearly will reject. Okay, because the government authority and was supposed to submit their claim within a time frame period. If they didn't submit their claim on time as per the IBC code, so then other stakeholder will not mean suffer due to this. That was their problem. That was their mistake. For their mistake, other parties will not means suffer. It was noted that that upon approval of resolution plan, December 6, 2021, new management took over assessee company in order to implement resolution plan as per the scheme of IBC on a clean slate basis. Because when new management come into the picture, means IBC gives a clean slate basis, means every previous any claim, any legal action, everything will be null and void. So means IBC will give the clean slate, because the clean slate means new management will not be responsible for any issue, any claim, any legal action, any other negative impact due to means means after means taking this taking over the business by the new management. So every pending things will be null and void. They can start their business from fresh start, and they new management will be responsible for all the activities when they will, their management will involve and take over the business, and they will start and restart the business and will be the part of the new management for that particular entity. From that day onwards, for pertaining to any operational activity, any financial activity, or any legal activity, so then the new management will be responsible. Once the resolution plan was duly approved by the adjudicating authority under section 31(1) of IBC, claims as provided in the resolution plan shall stand frozen, and it would be binding on the corporate debtor and its employee members, creditors, including central government and state government, or any local authority, guarantors, and other stakeholders. Since this successful resolution plan, applicant started running their assessee company's business on a fresh slate. Impugnant orders and demand notice were to be set aside. Demand cannot be issued in the name of the successor company. Okay, it's very clear. Fresh slate for new start business by the successor company. No demand cannot be issued in the name of the successor company. Okay. So that is very important and critical. Once the resolution plan is approved, whether the reassessment notice under section 147, 148 of income tax can be issued or not. See, when resolution plan is approved, no claim, no demand will be entertained as per the IBC code. Now we will understand in the light of this judgment. Delhi High Court in IRO Fiber Private Limited versus ITD 2024 was held that any liability other than those specified in the RP, which is pertaining to the period prior to the RP, is bad in law and to be set aside. In the said matter, notice for reassessment was issued under section 148D, which pertained to a period prior to acceptance and approval of the resolution of plan. In view of the decision in case of COC of SR Limited and Sish Kumar Gupta, that successful resolution, the applicant could not be forced with any liability other than those which were specified and factored in resolution plan and which might pertain to a period prior to resolution plan itself having been approved. Impugnated order dated 30 July 22 issued under section 148D was to be set aside. Okay, means if resolution plan is approved, if that assessment notice and that assessment claim is considered, then it's okay. Otherwise, new claim, new notice, new demand notice will not be entertained. Now, with the help of another judgment, we will understand. MTech Developers Private Limited and National Faceless Assessment Center, High Court of Delhi 2024, assessments after approval of a resolution plan, Honorable Delhi High Court in the present matter held that Section 144B of the Income Tax 1961 power initials proceedings for assessment, reassessment or recomputation being initiated in terms of the faceless procedure of assessment as prescribed therein. Any effort to reassess or recompute could tend to lean toward a recomputation of liabilities which otherwise stand freezed by virtue of the resolution plan. Having been approved, such an action or recourse would clearly be barred by section 31 of the IBC. As per section 140B, 44B, action is what the Supreme Court frowned upon and choose to decide as the Hydra head and thus being contrary to the clean slate principle which the IBC advocates. Means, in this case also itself, no reassessment, no recomputation, and change in claim. Means if authority submit their claims 10 crore rupees and after again reassessment, after approval of the plan, they want to submit or revise demand notice 12 crore from 10 crore. That is not acceptable as per the IBC code. Means here such an action or recourse would clearly be barred by section 31 of the IBC code. Means after approval of resolution plan, in case of change in demand claim raise, so that will not be entertained. Any effort to assess, reassess, or recompute would tend to lean towards a recomputation of liability, which otherwise stand freezed by virtue of the resolution plan having been approved. Such an action or recourse would clearly be barred by Section 31 of the IBC. So that is also very important. Means in shortcut we can say, we can understand, government authority, statutory authority have to submit their claim as per the time bound period, as per the model timeline mentioned in the CIRP model timeline, and as per the liquidation model timeline. In case of during CRP, if claim is statute due is submitted, if any changes is done after the approved resolution plan by adjudicating authority, will not be entertained and will not be considered and will be barred and will be rejected as per the IBC. Referring Dishnet Wireless Limited versus Assistant Commissioner of Income Tax OSD 2022, High Court held that IBC doesn't erect different level of protection or insulation dependent upon whether CRP has been initiated voluntary or on the basis of petition referably to Section 7 of the IBC. The tax authority cannot sustain the invocation of Section 144B based on their own failure to lodge a claim with the time stipulated. Okay. Now, here clearly mentioned the tax authority cannot sustain the invocation of Section 144B based on their own failure to lodge a claim within a time stipulated. Now, impact on moratorium on government dues or statute dues. Impact on moratorium on tax liabilities or government dues. The moratorium provided that the IBC aims to hold tax proceedings or corrective actions against a corporate debtor during moratorium period. Proceedings for recovery of tax would fall within the ambit of the moratorium. The apex court in Sunresh but emphasized that the tax department only have limited jurisdiction to assess, determine the quantum of tax and other dues. Even though various circulars issued by the tax administration have echoed this sentiment, it is not uncommon to see actions being undertaken by tax departments, including search and seizure operations, while the resolution plan is under progress. There is a need for strict adherence to the moratorium orders to uphold the spirit of the IBC. A unified approach is required to align actions with regulatory guidance. Means what is the impact on the moratorium on tax liabilities? If moratorium starts, okay, proceeding for recovery of tax would fall within the ambit of the moratorium. Okay. The apex court also emphasized that the tax department only have the limited jurisdiction to assess, determine the quantum of tax. Okay, so they will not be able to take any assets in their custody. They can submit their claim. So that will be the impact on the moratorium on the government dues or tax liabilities. In the matter of the Sunresh Bhatt, liquidator of ABG Shipyard versus Central Board of Indirect Taxes and Customs. That this case is really very important. Supreme Court has held that IBC would prevail over the Custom Act to the extent that once the moratorium is imposed in terms of Section 14 or 33(5) of the IBC, the respondent authority only has a limited jurisdiction to assess, determine the quantum of custom duty and other duties. The court observed that the issuance of demand notice to seek enforcement of custom dues during the moratorium period would clearly violate the provision of Section 14 and 33(5) of the IBC, as the demand notice are an intention in initiation of legal proceedings against the corporate debtor. Thus, the Supreme Court has fairly settled that recovery of tax dues cannot be made otherwise than in the matter prescribed under the IBC. The court has importantly observed that the authorities could, however, initiate assessment, reassessment of the duties and other levies. The resolution profession has obligation to ensure that the assessment is legal and has sufficient power to question any assessment if he finds the same to excessive. Means government authority and tax authorities, okay, will have the limited jurisdiction. They can assess, determine the custom duty, okay, but they will not take any legal action if moratorium starts. Okay, so they will submit their claim, submit their dues. Okay, but they cannot enforce. Okay, demand notice of custom duty during the moratorium period. Okay, it means when moratorium period start, no authority, government agency can take legal action. Okay, and enforce for recovery of any duty. They can do their normal activity. They can submit their means claim as per the IBC code, and resolution professional we have the obligation to ensure that whether that assessment is legal and sufficient power to question any assessment if we find the same to excessive. Okay, if RP means think that is assessment is legal and sufficient power, so means then it's okay. Otherwise, if we found excessive, then appropriate action will be taken by the RP as per the IBC code. In the said matter, the court relied on the ratio of the judgment in SV Kunsarkar versus VM Desh Pandey, AIR 1972, Supreme Court 878, case number, whether the court has held that the authorities can only take steps to determine the tax, interest, fines, or any penalty which is due. However, the authority cannot enforce a claim for recovery or levy of interest on the tax due during the period of moratorium. Okay. Now, that is very important and critical, which we discussed earlier also. One moment. Actually, various judgment given by the Supreme Court and other authorities, adjudicating authorities, but there is also an ambiguity in the treatment of statutory dues under IBC. So we will discuss here. As per IBC code, IBC will override, but here there is ambiguity in their judgment given by the Honorable Supreme Court, which we will discuss. First case we will discuss Ghanshyam Mishra and Sons Private Limited versus Adulas Assets Reconstruction Company Limited. The Honorable Supreme Court has considered the scope of Section 31, subsection 1 of the IBC, has held that once the resolution plan is sanctioned under Section 331(1) of the IBC, the claims provided in the plan will stand frozen. All such claims that are not part of the plan will be extinguished. Okay, this thing we already discussed. Okay, but in this case, now we are discussing the Ghanshyam Mishra and versus Adulas ARC company case. Now, this judgment was given by the Supreme Court. Okay, means if resolution plan all the claims covered, then it's okay. If resolution plan already approved, whatever claims not part of the resolution plan, they will not considered, and these claims will be extinguished. It is settled law under the IBC that the income tax dues are in the nature of the operational character as defined in the section 520 of the IBC. Okay. Now, means government authority don't have the priority in the claims, and these claims will be treated as a operational character. Okay. Now, under subsection 1 of section 31, the claims as provided in the resolution plan shall stand frozen. They will be binding on the corporate debtor, its employees, member character, including central government, state government, or any other local authority, guarantors, and other stakeholders. Means when resolution plan approved by the executive authority, so then resolution plan shall stand frozen, and that resolution plan will be binding upon all the stakeholders. All the stakeholders means whether corporate debtor, employee, central government, state government, local authority, grantor, or other stakeholders, which means that resolution plan will be binding upon on the stakeholder. On the date of approval of the resolution plan by the adjudicating authority, all such claims that are not part of the resolution plan shall stand extinguished, and no person will be entitled to initiate or continue any proceeding with respect to claim which is not part of the resolution. So, okay, so that is the main point. Now, the 2019 amendment in section 31 of the means I and B code is clarificatory and declaratory in nature, and therefore will be effective from the date on which the I and B code has come into effect. Constantly, all the dues, including statute dues, owed to central government and state government or any local authority, if not part of the eligible plan, shall stand as sanctioned, and no proceeding in respect of such dues for the period prior to the date on which the adjudicating authority grants its approval under section 31 would be continued. Okay. Now, the Honorable Supreme Court has considered the scope of section 31(1) of the IBC and has held that once the resolution plan is sanctioned under section 31(1) of the IBC, the claim provided in the plan will stand frozen. All such claims that are not part of the plan will be extinguished. It is certain though under the IBC that the income tax dues are in the same nature of the legislator as defined under the section 520 of the IBC. This thing, okay now. Now we will discuss another case, Committee of Creditors SR Limited versus Sishwar. A successful resolution applicant cannot suddenly be faced with the undecided claim after the resolution plan submitted by him has been certain amounts payable by a prospective resolution applicant who would successfully take over the business of the corporate. All claims just a moment. All claim must be submitted to and decided by the resolution professional so that a prospective resolution applicant knows exactly what has to be paid in order to take over and run the business of the corporator. This is the successful resolution. The applicant doesn't own a fresh slate as has been pointed out by herein above. For these reasons and collate, judgment must also be set aside on this count. Okay. Now, state tax officer versus Rainbow Papers Limited. Now, in this case, what happened? That is very interesting case. Rainbow Papers Limited, the corporate debtor, has defaulted on the payment of amount towards value-added tax and central state tax and under the Gujarat Value-Added Tax 2003. Section 48 of the Government Value-Added Tax Act creates first charge in favor of the State Tax Department on the property of the defaulter. Okay. For any outstanding amounts payable under GVAT Act. Set out below is section 48 of the GVAT Act. Tax to be first charged on property, notwithstanding anything to the contrary contained in any law, for the time being in force, any amount payable by a dealer or any other person or account of tax, interest or penalty for which he is liable to pay to the government shall be first charged on the property of such dealer or as the case may be such person. Means as per GVAT Act, first charge will be on the property as per the Gujarat VAT Act section 48. Okay, so that is the case sale tax officer versus Rainbow Paper Limited. Now, Committee of Directors of Rainbow Papers Limited had approached resolution plan submitted by Kushal Limited jointly with Sandeep Agarwal. Subsequent to the approval of the resolution plan by the COC, the state tax authority had filed claim in respect of its pending dues with the resolution professional of Rainbow Papers Limited. The resolution professional informed that sales tax authority that its claim has been waived under the resolution plan. The resolution professional of Rainbow Papers Limited filed an application before NCLT for approval of the resolution plan. In this application, the state tax officer filed an interim application contending that the government dues cannot be waived off in the resolution plan. Okay. Because means sales tax authority submitted interim application contending that government dues cannot be waived off in a resolution plan. The objection against the resolution plan was not maintainable given that the resolution plan was already approved by the COC. Okay, see here. First priority was on the property as per the GVAT under section 48, tax to be first charged on property. Okay, now Committee of Creditors has approved resolution plan submitted by Kushal jointly with Sandeep, already approved. Subsequently to the approval of the resolution plan by the Committee of Creditors, the State Tax Authority filed claim. Means Sale Tax Authority not submitted their claim as per the time bound period when already resolution plan approved by the COC. Okay. Now, on that basis, resolution means they the resolution profession is known that state tax authority, its claim has been waived off under the resolution plan. Means state tax authority had filed claim in respect of its pending dues with the resolution professional. But already resolution plan was approved by the COC. Okay. What it means when already resolution plan approved. For example, if resolution plan approved by the COC by 165th day, so it's not practically possible to entertain the resolution plan. Now, here we will not talk about the practical part on this thing. As per the IBC code, they were supposed to submit their claim in means time bound period as per the IBC code. If that sales tax authority not submitted their claim in on time, so then resolution professional and COC have the right to reject with on first hand. The resolution professionals will reject that means that claim. Okay. On what basis? Because resolution plan already approved by the COC. So when already COC approved the plan, resolution plan, so then government authority cannot means and don't have the right for get the that claim if government authority and statutory authority can approach to the adjudicating authority, but adjudicating authority as per the IBC code will not entertain their application. The objection against the resolution plan was not maintainable given that the resolution plan was already approved by the Committee of Creditors. Now NCLAT came into the picture. Section 48 of the GVAT Act doesn't prevail over Section 53 of the IBC, and that the government cannot claim first charge. Okay. Because as we have already discussed here, whenever IBC code have any contradiction with another act, so then IBC will override the impact of the other act. Okay, see, as per GVAT Act, as per Section 58, they have the means right over the asset. Means first charge on the asset. Okay, but as per the IBC code, in case company is in CRP process, so then they will have to submit their claim as per the IBC code. Okay, and that the government claim cannot first charge over the asset of Rainbow Papers Limited. Subsequently, the state officer filed an appeal before the Supreme Court against the decision of the unclaimed. Okay, now what was the decision by the Honorable Supreme Court? Are charge created under a statute would create a security interest in favor of the statutory authority, making such a statutory authority a charge holder and thereby a secured creditor. Okay, that was that decision was given by the Honorable Supreme Court. Okay. Further, Section 48 of the GVAT Act is not inconsistent with the Section 53 or any other provision of the IBC. The debt arising out of or in connection with the GVAT Act will be secured debt and will fall under the Section 53(1)(b)(2) of the IBC, which provides for priority of dues to secured creditors. Okay, means because as per GVAT Act, Section 58 says, means they have the means secured interest on the asset. Okay. Thus, the Supreme Court set aside enclave order along with the approved resolution plan and provided the resolution professional with an opportunity to consider such resolution plan. Okay, means that is, see here, what is happening in this case? If now when we will discuss another case here, see, in this case, as per this judgment, they given the judgment, GVAT have the first right on the asset, okay, is not inconsistent with the Section 53 of IBC. Wherever IBC code have the override impact of the another laws, another act. So that is the contradictory. Okay, means in most of the cases, statutory means Supreme Court says IBC code override the act, override the another act as per the IBC code 2016. But in this judgment, NCLT says, and clearly is saying here, but saying there doesn't prevail over Section 53 of IBC, and the government cannot claim first charge over the asset. Okay. NCLT also, the objection against the resolution plan was not maintainable given the resolution plan was already approved by. Here, NCLT and CLATE taken given decision as per the IBC code, but in Supreme Court judgment, they means as per IBC code, another authority don't have the first priority or first charge. Okay, for example, if any authority have the asset in their custody, when CRP will start, so they will have to give that asset to the means in the custody of IRP or RP or liquidator. Okay, as per the IBC code. So then, so that is the reason that this judgment is contradictory judgment. See here, if we will go above, see here. In this judgment, what is given? The claim providing the plan will stand frozen. All such claims that are not part of the plan is extinguished. Okay, see here. On a resolution plan approved by adjudicating authority. Okay, see here. All dues, including statutory dues owed to central government, state government, or authority is not part of the resolution plan shall extinguish, and no proceeding in respect of such dues for the period prior to the date on which the adjudicating authority grants its approval under Section 31 could be continued. See, this is the judgment given by the Honorable Supreme Court in the case of Ghanshyam Mishra and Sons versus Adulus Asset International Company Limited. But in here, in this case, State Tax Officer versus Rambo Limited, the judgment given was contradictory because these judgments are only given by the Supreme Court. In one case, they are saying the IBC code has the supremacy authority. As per the IBC code will override the other act, which is actually means true and fair as per the IBC code 2016. But in another case, the contradictory judgment given by the Supreme Court. in the case of Rainbow Papers Limited. Okay, so means that's why we are discussing here ambiguity in the treatment of the statute dues under IBC revenge judgment. There is ambiguity. Okay, means in the judgment itself given by the Supreme Court authority, okay, is also have the ambiguity in the treatment of this government dues and statute dues under IBC. So this thing we are discussing. When we are to take decision, we take decision in the light of the means judgments. If these judgments are contradictory, then there is also a very much problem. Now, authority means is taking is giving decision case to case basis, but decision must be on the basis of the IBC code. Okay. Now, see, this was the Gujarat Wait Act. Now we will discuss another act. Pashchimanchal Vidyut Vitran Nigam Limited versus Raman Ispat Limited. Okay. See here, just 1 minute. Okay. Pashchimanchal Vidyut Nigam Limited (PVVL) had entered into an agreement with Raman Ispat Private Limited for the supply of electricity. Raman Ispat failed to repay the electricity bill. PVVL attached the property of Raman Ispat under clause 4.3 F4 of the UPP electricity supply. The outstanding electricity dues constituted a charge on the assets of the debtor in favor of the sales tax department. Okay, now Uttar Pradesh Electricity Supply Code. The outstanding dues will be first charged on the assets of the company, and the license shall ensure that this is an entered in an agreement with new applicant. As a part of recovery proceeding initiated by PVVNL, the Tehsildar created an attachment over the assets of the Raman Ispat by way of order dated 23rd January 2016. Subsequently, the CRP in respect of Raman Ispat commenced on 11th April 2017 under the provision of the IDC. The COC rejected the plan and NCLT Allahabad passes an order for commencement of liquidation proceeding. The liquidator approached the NCLT for setting aside of the attachment order to be able to sell the asset of Raman Ispat under liquidation proceeding under the IBC. The Honorable NCLT directed the Tehsildar to raise the attached property to enable the liquidator to sell the property and distribute the proceeds of the sale in accordance with the provision of the IBC. This order of the NCLT was also upheld by the Honorable Enclave. Aggrieved by this order of the Enclave, PVNL filed an appeal before the Honorable Supreme Court. Okay. Now, Honorable Supreme Court, in this case, the apex court ruled that Section 238 of the IBC best owned an overriding effect upon IBC, even in the face of the non-obstance clause in the electricity 2023. Consequently, Section 173-174 electricity had no way, and given that the company was already under moratorium and the IBC process should proceed, the court overturned the motion established in the Rainbow Judgment and stated that the Rainbow Judgment has disregarded the waterfall mechanism outlined in Section 53 of IBC. The court found fault with the reasoning behind the earlier decision and highlighted its potential negative impact on investment in entities indebted to government bodies. Thus, it reverted to the previous status of the waterfall mechanism and ordered the liquidator of RIPL to settle the PVNL dues as per the provisions of the IBC. See here, in both the different cases, judgment is given by the Supreme Court. In first case, means they given the priority to the GVAT under Section 48. Okay, means in that case, the Supreme Court judgment given means IBC didn't override the GVA VAT Act Section 58. Here, judgment is given by the Supreme Court as per Section 238. IBC best owned an overriding effect. Okay, Section 230 has the overriding effect. But in this case, they are saying, when Supreme Court saying Section 238 have the overriding effect under IBC. Okay, although in the face of the non-obstant clause in the electricity of 2023, in this judgment, Supreme Courts are misaligning with the IBC code as per Section 230 had 38 have the overriding effect over the another act. Okay, but in rainbow cases, they didn't take and means the impact of 238 in previous case. So that is the ambiguity. Means in various judgment, the judgment are have the ambiguity. Now, Honorable Supreme Court in the PVN matter further had the Honorable Supreme Court has distinguished statute dues from government dues. Okay, means Honorable Supreme Court distinguished the statute dues from government dues and held that not all dues owned under a statute would amount to government dues. Because if any private company is in the means electricity supply, okay, it means government dues may be different from the statute dues, okay. So that's why only Supreme Court dismissed statute dues from government dues and held that not all dues owned as statute would amount to government dues. Okay. These statutory corporations created under a statutory are distinct juristic entities. For statutory corporations, the dues may be of operational, financial, or secured in nature depending upon the underlying transactions. Such statutory corporations might have government participation, but these are not the government authorities. Okay. The dues of PVVNL, because that is the company, but were treated as a secured operational dues in view of the provision of the clause 4.3 F4 of Electricity Supply Code 2015. Okay, for instance, in the PVVNL judgment, PVVNL was supplying electricity of Raman Ispat, which is not a statutory function, given that electricity can be supplied by private entities as well. Given this, the Honorable Supreme Court held that the dues owed to PVNL were not government dues, because if any means company is in the supplying the electricity, means for example in Delhi, Rajdhani Electricity Limited Company is supplying the electricity. Okay, so then that is not the government due. Okay, that will not cover under the government dues, because that dues are not means to government. In case if any company don't pay on time or any person is not paying, so that dues and that claim will not be called the government dues, because that electricity supplier is being supplied by the private company, not the government by government itself. Now, while distinguishing government dues from statute dues, the Supreme Court observed that dues which are payable or required to be credited to the treasury, such as tax, tariff, etc., which broadly fall within the ambit of the Article 265 of the Constitution of India, are government dues. Given that PVVNL was not performing a statutory function, the Supreme Court held that is its due will not amount to government. Okay, so that is the difference between the government and statutory due. Means government dues will be those type of dues which are being credited to the treasury, such as tax, tariff, which broadly fall within the ambit of the Article 265 of the Constitution of India or our government. Okay. Now, supremacy of the IBC over the Electricity Act 2003. Okay. The Supreme Court relied on Sundar Bhatt, liquidator of ABG Shipyard, versus Central Board of Indirect Tax and Customs, to uphold the supremacy of the IBC over the Electricity Act 203. In the Sundarsha Bhatt judgment, the authority, Central Board of Indirect Tax and Custom, was stopped from the recovery its dues through sales or confiscation of assets of the corporation. So that is also a very important case. Means in this what happened? Means in Supreme Court, that judgment is also given by the Supreme Court. Here, Central Board of Indirect Tax and Custom was stopped from recovering its dues through sale or confiscation of assets of the corporate debtor. If in cases that completely CRP or liquidation process, so then authority cannot means recover their dues through sale, which is in the custody of the means tax authority. The Supreme Court held that IBC would prevail over Custom Act 1962, and the authority under the Custom Act cannot initiate recovery or dues during the period of moratorium. Okay. If moratorium starts, if resolution plan started, application accepted by the adjudicating authority, okay, and moratorium accepted application by the authority means then moratorium starts under section 40. So in after starting moratorium, if any asset is in the custody of any tax authority, so then that that tax authority or any government authority cannot recover their dues and claims for selling of their particular assets, which assets is in the custody of the that particular authority. In the PVNL judgment, the Supreme Court ordered the Tahsildar to remove the attachment over the asset of Raman Ispat in view of the applicability of moratorium during the liquidation process. Because in PVNL judgment, Supreme Court also ordered to the Tahsildar to remove the attachment over the asset, because unless and until if asset will be handed over or in given the custody under the liquidator, so then liquidator will not be able to sell this asset, and after selling this asset or recovering that amount need to be distributed as per the section 53 waterfall mechanism. Okay, means no other authority or act can retain any asset after moratorium start to recover their dues and claims. If any assets in custody with or under any authority, whether Tahsildar, any other government agency, okay. So means here IBC code will, as per section 238, will prevail and have the override impact. Now, review of the rainbow paper judgment. The review petitioner submitted that the Supreme Court in the rainbow paper judgment had failed to consider the waterfall mechanism under section 53 of IBC. As she observed, Supreme Court observed that the review petitioner have been filed primarily on the basis of the observation made by the Supreme Court in the PVNL judgment. The Supreme Court observed that the strength of the bench in the PVNL judgment was same as the strength of the bench which had reversed the rainbow paper judgment. Okay, means strength was same. Okay, in both the cases. But review petitioner submit that the Supreme Court in the rainbow paper judgment has failed to consider the waterfall mechanism of the IBC, given that the observation made by Supreme Court in the PVNL judgment cannot be used as a ground to review the rainbow paper judgment. Okay. Further, the Supreme Court held that the rainbow paper judgment has considered the waterfall mechanism and other relevant provisions of the IBC. Thus, no ground for maintainability of the review of the rainbow paper judgment. Okay. Now there is another case we will discuss. Jet Aircraft Maintenance Engineer Welfare Association versus Ashish Chavaria Resolution Professional of Jet Airways India Limited and others with respect to GST dues. Just a minute. Ancillate New Delhi observed that the ruling in the Rainbow Paper judgment couldn't be applied in the Jet Airways case due to the specific exemption under Section 82 of the Maharashtra Goods and Service Tax Act 2017, which provides for precedence of the IBC over Section 82 of Maharashtra GST Act. Means Ancillate New Delhi observed that the ruling of the Rainbow Paper judgment couldn't be applied in the Jet Airways case due to the specific exemptions under Section 82 of the Maharashtra Goods and Service Tax Act 2017 provides for precedence of the IBC over Section 82 Maharashtra GST Act. Section 82 of the Central Government and Service Tax Act 2017 as set below. Notwithstanding anything to the contrary contained in any law for the time being in force, save as otherwise provided in the IBC Code 31 of 2016, any amount payable by a taxable person or any other person on account of tax, interest or penalty which he is liable to pay to the government shall be a first charge on the property of such taxable person or such person. This is the same case that section says section 82, they have the first charge on the property. Okay. If they are not getting their dues, so then they have the right and they have the first charge on the property of such taxable person. So means first charge means they can recover their dues for selling that asset. Okay. So means here again we are discussing whether IBC code will override or not when IBC dealing with another act, whether GST, whether income tax, whether property in the custody of any authority, means whether in Tehsildar, whether in government department, whether in means in the statutory department. Okay. We also discussed here main thing, all the statutory dues are not called the government dues. If Electricity Act is there, if any company is supplying the electricity, so and if dues are pending for that particular company, so that dues may be covered under the statute rules, but that will not be the we cannot say that is comes under the government dues, because government dues are those dues which are being credited in the government treasury. Okay, if government means government undertaking any company or any private company is supplying electricity or water and these type of activities, but these will not be called the government dues. Okay, means so this company will not be take the benefit. Okay, means and covered under the government dues. So that is also a very important and valid point. Okay, we also discuss the government dues and what are the operational creditors, government dues and statutory dues. We have already discussed. Okay. And what will be the priority of the payment as per section 53 of waterfall mechanism? This thing we have discussed. Okay, so means in cut short, we have to follow the IBC code when we are dealing with government dues and operational creditors claims. If not submitted, the claims within time period, whether by operational creditor, whether by government authority, so that claim will be extinguished, will will be not accepted by the resolution professional. Okay. So these are the critical and important things which needs to take care. And also the important thing which we discussed here, in case resolution plan is approved by adjudicating authority, if new resolution applicant, new management come into the picture and new management is taking charge of that particular entity, so then that new management will start the operations as a fresh business. Clean state will be given to the new management, new management. New management will not be responsible for any previous demand notice, or and also no demand, further demand and notice can be issued to the new management. Okay, in case means because they will start the business as a fresh start. Okay, as a clean state will be given by the adjudicating authority. Okay, so means new management, yeah, after resolution plan accepted by the means resolution applicant, so, so that person or that company will not be responsible for any previous demand or any issue or any legal thing. So that new management will not be responsible for any previous demand or any notice. So these are the main things. Now, enclate here, section 82, we have discussed here section 82 of the Central Goods and Service Tax Act as set out below, notwithstanding anything to the contrary contained in any law for the time being in force, save as otherwise provided in the Insolvency and Bankruptcy Code, any amount payable by a taxable person or any other person on account of tax, interest or penalty which he is liable to pay to the government shall be a first charge on the property of such taxable person or such person. Means as per section 82, first charge on that property, asset on property will be of miss as per CGST Act section 82. Okay. Now there is another Shri Metallics Limited versus additional director general and others with respect to custom duties. That is also very important. Delhi High Court in Shri Metallic cases distinguished the rainbow paper judgment. Section 42A, 142A, Custom Act. The dues of custom authority had first charge in respect of liability under the Custom Act if IBC code is not there here, because if that entity, I mean to say, if that entity is not in the process CRP or liquidation, okay, so then IBC will not come into the picture. If IBC is not coming into the picture, if normally, if company is dealing with the custom department, if customer department section says 142A of the Custom Act, the dues of customer authorities have first charge in respect of liability under the Custom Act. So then, so they have the power and authority as per the Custom Act. Okay. But when IBC code will come into the picture and that company is already in the process of CRP, so then IBC code will override the Custom Act. It was held that given that specific assumption is provided under section 142A of the Custom Act, which provides for precedence of the IBC over section 142A of the Custom Act, the rainbow paper judgment will not be applicable. Just a minute. It was observed that the factual matrix in the rainbow paper judgment was different, given that it involved the filing of the claim post the last date of submission of claim and after the resolution plan was approved by the NCLT. However, in the Shri Matri case, the statutory authorities never submitted the proof of claim. See here, the rainbow paper judgment will not be applicable. Further, it was observed that the factual matrix in the rainbow paper judgment was different given that it involved the filing of the claim post the last date of submission of claims and after the resolution plan was approved by the NCLT. However, in the Shri Matri case, the statutory authorities never submitted the proof of claim. When proof of claim is not submitted by the statutory authority, so then that claim will not be passed. Okay, and we see here impact of dismissal of review of the rainbow paper judgment. The rainbow paper judgment has effectively made the payment of secured government dues as mandatory content for approval of resolution plan. Means rainbow paper judgment has effectively made the payment of secured government dues a mandatory content, okay, for approval of resolution plan. Given this initial criteria are required to take a higher haircut, which will impact. Just a minute. Financial criteria required to take a higher haircut, which will impact the overall recovery for financial creditors under the IBC. Additionally, given the dismissal of the review petitions, the ambiguity in the treatment of statutory dues continue to persist with the PVVNL judgment and the rainbow paper judgment given, providing for different treatments of statutory dues. A refer to a large bench of the Supreme Court is required to clear. A refer to a large bench of the Supreme Court is required to clear the ambiguity created by the different rulings on the crucial questions of law. Okay, means different judgment, there is ambiguity is there. In case if we are to take decision in the light of the judgment, it's really sometimes difficult because if we will give the base, if another stakeholder is giving the reference of the judgment or reference of that case as per their convenience, so it's very sometimes it's as a resolution professional, as an insolvency professional, it times sometimes it's very difficult to handle and manage because if ambiguity is there, as per section clearly says the IBC have the override in fact as per section 238, but in the due to the ambiguity, so there is a means question, crucial question of on law of law, so that's why it is required to see these cases by the larger bench of the Supreme Court, so required to clear the ambiguity created by the different rulings. Alternatively, an amendment in IBC may also clarify this issue. Okay, if there is an amendment, what was the base, on what basis the judgment and action can be taken, if through the amendment in IBC, it will also solve and clarify the issue. However, one aspect is clear that in view of the precedents following the rainbow paper judgment, the rainbow paper judgment will not be applicable in cases where the underlying provision of for creation of security interest also provides for a specific exemption for proceeding precedence of the IBCs, such as the provisions. Means, if in another act is saying the means securing interest in the asset, so, so then there is no issue. But when IBC is in the picture, that related entity or company is in the process of CIRP, so then there is a problem. Means then IBC code will override and should and must ride other act as per the provision of the IBC code 2016, as per their intention, as per their preamble, as per their purpose, as per their objective. Okay. Otherwise, IBC code is means objective or purpose will defeat. So that's why it's really very important to understand in the light of the IBC code. Okay. Now see here. So these were this here what we are saying here. See here. We also discussed ki whether we will discuss two or main points. This is also very important. What will be the role of tax authority and government authorities in the insolvency resolution process? And also we discussed the main important things ki whether assessment order and demand notice can be issued to the new management who takes over the existing business under IBC. So answer is no. Okay, because new management have the clean slate. Okay. We also discussed once a resolution plan is approved, whether reassessment notice under section means under any other section can be issued or not. The answer is no. That is also very important critical questions during practicality we face. Okay. So that is also very important. Once the resolution plan is approved, so then no authority, no government agency, no government and statutory dues, no as per demand notice can be issued. Okay, as per the IBC code. Okay. We also discuss here assessment after approval of resolution plan. So that is also the reply will be no. When already considered in resolution plan, so then all the stakeholders will bind as per the resolution plan. No changes will be considered after the assessment, after the approval of resolution plan. And also impact of moratorium on tax liability and government dues we have already discussed here. So that was also very important and crucial point. Impact on moratorium on income tax liability. On tax liability we discussed here. But here main problem which we are facing as a resolution professional or liquidator, ambiguity in the treatment of the statutory dues under IBC, relief and judgments. Thus, so many judgments we have because normally we have to refer the judgments and cases when we are stuck up and when we are unable to refer particular section and provision, so then we have to follow the case judgments given by the honorable adjudicating authority. But when we have the judgment on the same cases, on the same cases, on the same type of nature, different cases, and judgment given by the Supreme Court, if there is an ambiguity, so then question arise on the in the law. So then we have to face which judgment we need to follow, because see every stakeholder will, for example, if another stakeholder who is submitting their claim, if that stakeholder will refer that judgment or case which is in the favor of will be in the favor of the stakeholder. So ambiguity is need to remove, because we referred here Ghanshyam Mission cases, means the cases which will not be the part of the resolution plan will be frozen. Resolution plan will be frozen, will not be entertained. But in this case, what is happening here? In here, in this case, what is happening here? Sales tax officer versus rainbow cases. The judgment is given by the Supreme Court ki, as per section 48 GVAT Act, have the charge on the asset. So that is not as as aligned to the IBC code. That was the issue and that was the problem. Okay, in another case here, PV in cases, what the judgment is given here? With section 238 IBC have the override impact. So that's why here judgment is given in the favor of the IBC code. In above, not given in the favor of the IBC code. So that is the problem here. So how can we remove this ambiguity? Either Supreme Court need to discuss in larger bench or need to amend in the IBC code. These are the steps where we can remove the ambiguity. Unless and until ambiguity will be removed, so then there will be a confusion. Okay, so that is the issue here. Ambiguity need to be removed. But in a normal means circumstances, or in if we will ignore the if we will accept one or two cases, if you will say, in conclusion, we can say IBC have the supremacy and have, as per section 238, override impact when deal with another act. So that is the conclusion. Okay. Now, if you have any query or question, you can ask. Otherwise, we can conclude the session. Okay. If you don't have any query or question, then we can conclude the session.
So there are no questions. I think we should conclude.
Anjali, we can conclude the session.
Yes, sir. Thank you very much, sir, for your nice presentation and sharing your valuable experience and thoughts regarding the topic. Sir, can I request you to kindly share the PPT with us?
Okay, thank you. Thanks to everyone.
सर PPT share कर दीजिएगा please.
Sure.